had a few people reach out to me on Twitter asking about how I find my trade setups. So basically, just wanted to do a short video on supply and demand and how we incorporate that into our daily options trading. So if you're not familiar, supply and demand, uh, you can find it throughout the market, any time frame. It's really just the large imbalance of price and kind of where it shows up on a chart. There's four different types of supply and demand. There is a drop, base, drop. There is a drop, drop, base, rally. There is a rally, base, rally, and there is a rally, base, drop. So basically, those are the four kind of laws of supply and demand. So uh, basically, you could see these on a chart, and I'll draw them out for you here. So here's looking at SPY, for example. So basically, how you would draw these zones is pretty much find. So right here is a drop base drop supply zone. Basically, you would draw a zone like this and wait for price to come back into the zone before heading back down. So you would imagine something like this and then continuation to the downside. You can use these zones in trading options specifically. For example, how I would do it is as price is coming to our supply zone, you can sell a put credit spread. You could do a broken wing butterfly, broken heart butterfly, anything to really capture the down move here. You would just go to a lower time frame, wait for price to shoot back into this level, break structure, and then that would confirm your down move. People can buy puts. I don't really buy options. I just pretty much sell them. So again, different strategies out there that you can use, like put credit spreads for if you're looking for a move down. If you're looking, and so this would be a supply zone here. Right here is a demand zone. So we could see price dropped, based, and rallied here. And if we go to the weekly, you can probably see it a little clearer here. So basically, we would draw a zone here, here, and you can actually see price is in the weekly demand zone right here. So we had a drop, a base, and then a rally. So we would imagine from here, price would be coming back up, hopefully to test this zone here before continuing back down. So this is a valid supply zone here because we broke structure right here. So basically taking out this low confirmed that this is a valid supply zone. So if we do rally back up into this 397 to 402 range, I would expect a down move from there. Here's actually another supply level right on top of this. So you can see we dropped, we rallied here, based, and then dropped. So basically right here is where you would draw your other zone. So there's actually two levels of supply on the daily ahead. So that might cap any significant run up if we do bounce here, which I imagine we would coming out of this weekly demand. Now, again, you can use credit spreads here with volatility kind of expanding over the past 2 days or the past couple days last week. Volatility is rich. So, we want to take advantage of that as option sellers. So bull put spread would work great here with, enough credit. You would basically just throw in an order, maybe somewhere down here, and then hopefully play for a vol collapse. But you could also do a broken wing butterfly. You can also use supply and demand. You can see here, if we're pinballing or in a range, for an iron condor. Basically, we're saying that price is in between this weekly demand zone and this daily supply zone. So basically, if you wanted to, if you're thinking that we might chop around between these two zones, you could throw an iron condor, maybe some, your bear spread up here, bullish spread down here, and try to capture the theta decay in the middle and the chop. So this is, again, really simple video. Basically, just wanted to outline how to identify supply and demand levels, and also how to trade different strategies with them. Um, yeah, if you could like the video, subscribe. We do have a website, optionsinferno.com. If you want to check that out, that would be much appreciated. Hopefully, you leave some comments, and we're always learning. So, thanks.